Intel stock has piqued my interest, and right now it sits at the top of my buy list. To see why, I've put together 5 financial charts. I'm throwing them up on your screen now. We're going to go over each of these in a little more detail. These are things that I always look at before investing. And to start my research, I always ask, why should I not invest in the company? Too many investors become enamored with a company's products and services. They focus on the potential upside, and they fail to incorporate risks or counter arguments, as well as failing to look at the company's underlying value. Now, before we dive in, I'd really appreciate it if you just tap the like button down below, as well as subscribe. Also, if and when I buy Intel stock, I'll go ahead and pin a comment down below with my entry price. If the risk to reward looks favorable enough, I'll put upwards, maybe even above 10% of my total savings into the company. Unlike other sources of many other sources of information out there, I really try to put my money where my mouth is. So I hope you stick around. All right, why should I not buy Intel stock? Up first, Intel is losing market share to AMD. After lagging behind Intel for decades, it's been catching up in recent years. AMD uses Taiwan Semiconductor Manufacturing, that's TSM, while Intel makes its own chips. This has led to some issues. Intel recently announced a 6-month delay in its 7nm chip product. As a result, its stock price closed 16% lower for that day. That's a really big move for a big company. And on the other side, AMD was up about that same amount, or the same percentage. AMD already uses 7nm products. Now, Intel is considering moving away from making chips in-house. In the short term, its constraints and setbacks will lead to more market share loss, most likely. And on top of AMD taking market share, Apple is also phasing out Intel chips in its Macs. For a full transition, it's going to take about 2 years, and it's going to end a 15-year partnership. Although Apple already uses its own custom chips for its iPhone, iPad, and also the Apple Watch. These are some of the biggest concerns I have when it comes to investing in Intel. Intel's cut of the pie might become a little smaller going forward, but growth of the overall chip market, or chip markets, might offset that. More devices are coming online, and the demand for processing units continues to climb. Intel is a bit bandwidth constrained for now, but it's going to continue to expand. And this gives it some ability to cherry pick the best projects. Still, in the short-term popularity contest, setbacks have pushed down Intel's share price. But for long-term investors like me who really look at future cash flows relative to current cost, it's looking like a much better investment opportunity. Unlike AMD, Intel is much more diversified and has huge cash flows to innovate or continue its innovation. It's helping lead the charge with 5G, cloud computing, AI, and autonomous driving. It acquired Mobileye, a leader in computer vision for autonomous driving, for, I believe, $15.3 billion. Intel's acquisitions and organic growth should continue to push Intel's revenue higher over the long run. And when looking back, this chart shows both a climb in total sales and operating income over the last 10 years. For a company that's losing market share in certain computing segments, that's healthy overall sales growth. And Intel has around a 30% operating income margin. That's huge. This helps lead to strong free cash flow for further R&D, as well as rewarding shareholders with dividends. I'll show you free cash flow and dividend trends in a moment, but first, let's take a closer look at Intel's financial health. Debt has climbed higher, coming close to $40 billion, but in a low interest rate world, this can make more sense. And Intel has a high investment grade credit rating of A+. Overall, Intel has more than enough cash, over $25 billion, and also free cash flow to manage its debt. Up next, let's go ahead and take a look at free cash flow relative to total dividends paid. Over the last 10 years, free cash flow has increased, It's bounced around a bit, but it's easily covered dividend payouts. With last year's payout ratio below 40% and solid future prospects, the dividend looks very safe. The board of directors has also continued to increase Intel's annual dividend per share. This next chart shows that rewarding trend, as well as total shares outstanding. Intel has bought back over 1 billion shares outstanding over the last 10 years. This has increased existing shareholder ownership. And after a 5-month buyback pause due to COVID, the company has announced another $10 billion buyback program. Now, some analysts argue this money should instead be put towards fixing its chip delays, although I disagree with that. Intel shouldn't throw money at a problem, and is already taking steps as well as putting money into fixing those issues. Intel has the cash flow to overcome those issues, as well as return value to shareholders. Share buybacks also make much more sense when Intel stock is trading at lower levels. And a $10 billion buyback around current levels will reduce shares outstanding by about 5%. Now, for one last chart, let's go ahead and look at 2 quick valuation metrics. Price to sales comes in at about 2.7. That's below its average over the last 10 years. And one of my favorite metrics, EV to EBITDA, comes in at 5.6. That's the lowest over this time frame. And in the current market, it's hard to find such a reasonable level. Overall, Intel's current valuation and future prospects have pushed it to the top of my buy list. I've done deep research and have shown you just some highlights here. If you'd like to see more insight or have any questions, please go ahead and drop a comment down below. Have you invested in Intel? Or why won't you invest in Intel? Do you think there are any important considerations that I've missed? I'd love to hear from you. Also, I'd really appreciate it if you just tap the like button down below as well as subscribe. But either way, thanks for stopping by and making it this far. Also, you can go ahead and check out some of my other videos and research.